This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial market. Today I'm up 1.68R on the eval, which makes a new equity high, and this is a great way to start the new trading month. But some red flags, some caveats, some things to look out for. The first trade that I took today, I lost 34 points or $200, which is way over the amount that I should be risking on any given trade. Way too much. Now, why is that? Well, one of the problems that I have recently in my trading is I am being prematurely stopped out of trades because I'm not framing my stop loss at the point of invalidation. What proves that trade wrong? I'm framing it at the point where I'm comfortable with risking that amount. So I'm noting that I'm scared to risk. I have a risk intolerance. I am risk adverse when this is just an eval and this is just one single trade. And I know I have the ability to go back in there and take a following winning trade the next day, just literally doing the same exact thing, just following the process that I've developed. So why am I so scared to risk any given amount on one particular trade, right? So in order to combat this, I'm trying to intentionally become more resilient to the loss that I take. And this trade, the way that I did that was risking more. But in this case, this particular setup was extremely impulsive, and I moved my stop loss to increase more risk on the trade, not willing to admit that that was just a loss. So that trade is down 1.56R. But the other side of the coin is, because I'm more resilient to the losses that I'm taking, I'm able to get in there and find a winning setup, get on side with the move that I am looking for the day, that I did plan on my pre-market plan, and ride that out to the full take profit, the objective that I was looking for in my pre-market plan. So it's two sides of that coin, right? On one hand, I'm risking more and I'm losing more. But on the other hand, my recovery factor, it is going up. If you look at my recovery factor, 100 right now. If you look at my consistency, it's improving, 79. And that's only because I'm becoming more resilient to my losses. It's because I've realized that I have the conscious ability to control the perception of my losses. I can make that loss as painful as I want it to be. If I let myself get down, if I'm negative about it, if I let myself lament, if I sulk, if I feel resentment, if I feel like the market did something to me, that loss can be extremely, extremely painful, so much to the point where I physically feel it in my chest. And that is what happened last Friday. But then I came to the realization, bro, what are you doing? You are an eval, and it's one losing trade. And you know you have a system where you can come to the market the following day, do the same thing, and get the favorable outcome that you're looking for. So why does this loss matter at all? And I've also been reminding myself a lot recently that the greatest traders are the greatest losers. You got motherfuckers playing $100,000 hands. Do you think they care when they blow $50,000 in a single trade? The top traders, the elite, the upper echelon of traders. Do you think they are scared to risk $100,000 on a trade and lose that? And when they lose it, do you think everything falls apart for them and their world is shattered? Absolutely not. They take it as one point in the data set. And guess what? They do the same thing on the following trade. That's it. So that's how I was able to get the outcome that I was looking for today, but at the cost of a loss that I was way over my original risk tolerance. It's two sides of that coin. Number one, you risk more, but at the same time, your recovery factor, your consistency is going to improve because you're able to tolerate loss. Extremely important, and this is exactly what I'm working on recently. So the optimal market approach, what I was looking for today. First thing that I asked myself, how am I feeling? Am I confident in the read on price? Am I not confident in it? And do I think the cards are stacked against me today? Do I think the odds are not favorable? How am I feeling? Today I was 100% confident in the idea of higher prices because everything from higher time frame narrative and market criteria, putting those two together, that's how I arrive at a bias. Everything that's telling me that this thing is going to go higher, probably make a new all-time high. I don't have to hold for the all-time high in order to make money today. I don't demand that. So the playbook that I was executing was protraction buy. Now, higher time frame narrative, like I said, higher time frame narrative, market criteria, put those two together, and what do you have? Your bias, your market approach. So the higher time frame narrative, I'm noting how prices finally cleared the sell side under Monday and Tuesday daily low, revisited the buy side imbalance, sell side inefficiency on the daily chart, and it's finally building the discount wick on the weekly, potentially putting in Wednesday low of week. So now I'd want to see them working towards Monday and Tuesday high. Market criteria, which is how the market is presenting liquidity and inefficiency in the overnight pre-market session, how things are setting up before the open. Prices clearly seen protraction and premium arrays that dropped under Monday and Tuesday daily low have failed, which tells me something has changed. I'm noting this setup of low resistance sell side pre-market, so ideally I'm looking for a slide lower that clears the sell side first, Then price begins to build new PD arrays. So my trade plan, and this is extremely black and white. I've been refining my market approach. So if you look in the homepage of my YouTube channel, you'll see that I have a video covering this exact approach here that I do day in, day out without fail. I'm extremely consistent with it. I'm not going to miss a beat, but I'm just getting more black and white with it. It used to be a lot of different things. Now it's just higher time frame narrative, market criteria, trade plan, daily objective. That's it. That's it. It's all I need to know, right? It's all I need to communicate with myself. So today, I want to buy the market as it drops down, clearing out low resistance sell side and rebalances to a discount of the impulse swing made back inside the range. I'll look for signs of respect to the 1 hour inversion fair value gap to be a buyer. So only one PD array that I'm noting that I want to be a buyer at. That's it. I'm going to frame the trade idea off of this PD array specifically from the higher time frame. That's it. And then I'm also noting how we have 10 o'clock drivers. So the potential for the real swing to come after that is there, which is typically what happens, right? We had 10 o'clock ISM manufacturing PMI, and we also had ISM manufacturing prices. So you want to wait for those drivers to come out. Typically the real move of the day is going to come after that. And then my daily objective, this is what I'm targeting. One of the other problems that I have, the reason that I'm not able to risk anything, the reason I was risk intolerant was because I was not aware of the potential reward on the trade. So of course the trade is going to be scary if all I'm looking at is the potential amount that I could lose. Now, how do you think I would feel? How do you think I would feel differently if I'm aware of the potential amount that I would lose, but also the potential amount that I would make? In order for that to be, I have to be aware of what I'm looking for that session and be confident that the market can deliver that. So that's what I'm working on. Just being extremely black and white with what is my daily objective? What am I thinking that the market is going to deliver today? Being extremely black and white with that and listing it right here. I'm targeting the clustered new day opening gaps and new week opening gap starting at, and I'm literally listing a specific price point in my pre-market plan as my first partial / low hanging fruit objective. Although I will admit I was not aware of this intraday. And then Asia high above that, and then Tuesday high above that. All right, my bad, I had a sneeze. But anyways, if you look at the weekly chart, right, price has finally made a discount wick on the weekly candle. Let me run through this real quick. Noting the reaction out of the daily BISI and run below Monday and Tuesday low. So if you look at Monday and Tuesday, they were relatively equal, right? And at that time, when those candles were relatively equal, we had no wick, no lower wick on the weekly range. Now, how likely is it that this weekly candle is not going to have any kind of discount wick at all? It's not very likely. 9 out of 10 times it does. So we have to wait for price to trade down. It does, clears out Monday and Tuesday low. They were relatively equal. Drops into the daily gap and shows a willingness to react out of that in the overnight session. If we look at the 4 hour, look at this large discount wick that it produced. Clearing Monday and Tuesday low, large discount wick. Does not even trade to the upper quadrant. That's bullish. So I'm noting the reaction of the daily BISI and a run below Monday and Tuesday low for potential Wednesday low of week. I'm thinking the low of week is probably going to be in because now we've cleared Monday and Tuesday low and we've built that discount wick on the weekly range. So I like the large discount wick left, noting that. So now I'm looking for price to climb back inside the range for Monday and Tuesday daily highs. Being very clear, very black and white, very straight up. Nothing complicated, nothing complex. This is what I'm looking for. Right here, right in front of your face. So I'm watching the inversion fair value gap for potential buy opportunity on the 1 hour time frame. This PD array right here. Extend that out in time, and I'm looking for signs of strength inside that gap. As simple as easy as that. So look at this large drop down that we had in Asia. So they're intentionally repricing it down here, clearing out those equal lows that we created. So in the eyes of retail, this is a level of support, right? We know sell side's below that, so the market takes that out of the marketplace. Then what's next? Buy side. So my low hanging fruit objective is going to be the new day opening gap. And I'm watching the 1 hour inversion fair value gap for potential buy opportunity. Black and white, straightforward. You know what I'm looking for. Now, the trades that I actually ended up taking, let's look at the first trade. Let's break it down. Let's go to the recording. Let's see, do I need to run down on the chart real quick first before we do that? Let's just take a look at what the market actually ended up delivering, right? So it did deliver in accordance to my pre-market plan. We traded down. We rebalanced the impulse swing made. I framed the dealing range from this low to this high, the new impulse swing that it made, because we saw a continuation of it initially. So from this low to this high, this dealing range, the market does rebalance to a discount of that. Notice how this candle does not drop down to the upper quadrant right there, and this is the candle that I'm buying the market long on, and I'm targeting Tuesday daily high. But initially, I thought, And this is my basis for trade 1, the trade that I lost $200 on way too much. I thought that the market had done enough here to go ahead and break out and just run right for Asia high, because if you notice this drop down into this 15-minute gap right here, it closed above it, right? So that's a sign of strength, and usually, typically what happens is when the market leaves this kind of sign of strength around a discount array like this, we can anticipate a drive below that candle's low to fail. And it does, but we don't get continuation in that move. And the real move is going to happen more after we had that 10 o'clock driver. So what are the mistakes that I noted intraday today for my live trading check-ins? This is the second part of the daily process. The first thing that we do is you have your market approach, right? You make it very clear with yourself what you're looking for that day, so you can go back at the end of the session, review that, and see where you went wrong, where you went right, why was it right, and why were you incorrect? Did you follow through with your plan? How did you execute on it? These are things that you have to do on a day-to-day basis if you want to grow, if you want to get better. So live trading check-ins at 9:35, I'm thinking that price to show me it's clearly bullish and it's reacting here, so I wanted to look for a drop into first presentation. It should rebalance the impulse swing it made. It could form a 5-minute BISI. That'd be even better. I'd like to price close strong in the first 15-minute range, then look for a drop down to buy on the 9:45 range. Right here, you know exactly what I'm looking for. So even though that trade was a losing trade, I'm still following through with the plan that I was looking for. I stated these things very clearly with myself, and I followed through with it. So is it really a loss? It is a loss, yes, and I did lose a lot more than I was anticipating to lose, but I did exactly what I told myself I was going to do. So really, I'm building good habits. But if we're being real, I never had any confirmation to buy the market there, and how I did buy the market, I was not proud of at all. So what I just mentioned, when I read from the live trading check-ins, I'm waiting for this to be a large up close candle. Then the following, I want to see it drop down, trade down into this range, this candle's range, and then trade higher for the Asia high, right? I just stated that in the live trading check-in. It can form a 15-minute BISI, which it did. So I'm noting the market as it's dropping down into this. On the 1 minute, we have first presentation, which is the red gap that we have annotated right here. So I'm looking for the market to drop down in this for buying opportunity. Now, we had a really sudden, large, fast down candle that never made it make sense for me to buy this. But I thought when it tapped this lower quadrant right here and then came up off of that slightly, I thought that was that drop down that I was looking for on the 9:45 range, that 15-minute chart, to produce the next rally higher. So if we look at the recording, now that you understand everything that I was thinking behind the trade, and note how I can tell you everything that I was thinking behind the trade because of the process that I do. So I'm doing the best that I can to make the highest quality decisions. Now, obviously, it's not going to be the case every single time. I am human, right? Is this the right day? Hold on. I don't think this is the right day. This is the right day. Here we go. Okay, so I'm getting my buy limit order because I'm really confident in the idea that the market's going to drop into first presentation and offer me some buying opportunities. So I'm going to be pretty confident in buying the market as it's dropping lower, but I really had no confirmation to ever buy the market here. So we note this really sudden large drop, boom, like that. And like I said, notice how it bounced off of this momentarily. I thought this was going to be the spike down into first presentation to send it higher. I've seen this before. We have these quick spikes down when the market is bullish, and then boom, it comes right back up. In this case, it doesn't do that. That's fine. But the amount that I risked on this trade was not okay. So I'm buying that. I'm thinking that's going to make the low of that 15-minute candle, because now we're rebalancing the range, and it's going to continue trading higher. My stop loss initially goes at the midpoint of these down candles, which I would consider the order block. But notice how fast it comes after my stop, and I'm like, okay, I'm definitely probably wrong on this, right? So what do? I move my stop loss to the low of that, thinking, oh, I need to give it more room to breathe. So this was my original stop loss, right? If I get stopped out here, it's probably only a $100 loss, and I'm not losing 35 handles. Matter of fact, let's measure it. 24,75650. If we go to 24,75650, 24,778, I'm probably not going to remember those numbers, so I'm going to put it right here. Let's see how much I would have lost. 24,77825, 77825 right here, down to basically this candle's low. 24,75650. 21 handles. Okay, that's better than 35. So if I risk 21 handles, it's still probably going to be a $140 something loss, I believe. but better than 200, right? I'm saving $60 if I simply don't move my stop and just admit that this was an extremely impulsive trade and I'm going to get stopped out on it. Just get stopped out, just take your loss and move on. If you're resilient to your losses, if you have a high risk tolerance, then you're able to just completely shake it off because the greatest traders are the greatest losers and move on to the next trade. Just do the same thing and you could potentially get a different outcome and erase the drawdown that you've just put yourself in. So I put myself in literally the biggest single intraday drawdown that I've had on this entire eval attempt. Okay, now after I've stopped out there, what am I thinking next? Full session breakdown. I can tell you everything. So 9:45, this is before the 10 o'clock driver. The more it falls into time distortion, the less interested I am in engaging before 10 o'clock. So even though we have this dive below this low, we have an inversion fair value gap now, I'm still going to wait for that 10 o'clock driver to come out. Not interested in trading it until that red folder comes out. Then at 9:50, this was not smart reacting to a large down move suddenly. That is a huge hit, but it's only one loss in an eval. So now I'm reacting to that loss, kind of reflecting on it a bit. And this was at 9:49, right? So a sudden drop, 9:50. Reflecting on the loss after I got stopped out. That is a huge hit, but it's only one loss in an eval, which is exactly the point that I'm trying to get across to you guys. If you become resilient to your losses, you seriously got to take into account how you're thinking after you're taking these losses and how you start thinking when you're looking for your next setup. Because after I took this huge loss, how I was thinking about the following trade, that was influenced as well. There was an easy, obvious setup and everything made sense. All the signs were there to see the market higher, but I'm still feeling a lot of doubt, a lot of hesitation, a lot of negative thoughts surrounding this second long opportunity that I had. It didn't feel like a good trade for me because I took a huge loss. You take that huge drawdown and it eats at you. It does. So take into account how your losses make you feel intraday and how you feel exactly after them, and then how it makes you feel looking for a second setup. Because it's going to affect you. It's going to affect the way you think. It's going to have a pull at your mental process, literally. And you have to know how it does affect you so you're able to be resilient to that. So I'm seeing out the initial push up, made me interested in buying the market. But the market disregarded my plan because I have to wait for it to rebalance the impulse swing that it made. And it did not. So I'm noticing my tendency to take a lot of losses before 10 o'clock drivers come out. That's probably the biggest lesson this week. So now I'm absolutely not doing anything until 10 o'clock. I also opened up the risk on the trade, trying to build my risk tolerance, but that only lets it larger unnecessary loss. And then again, like I said, how is that going to influence the way that you think in the following trade when you're looking for another setup? I knew this was probably going to be a large losing week, so now that I'm thinking, okay, I'm down $200 in drawdown and still sitting here, still waiting for the next setup, it's not looking good. And it's kind of hit me. You can see the effect on it on my mental state right here. I knew this was probably going to be a large losing week based on the fact that I took 2 trades on Monday. I'm repeating the same mistake I made a previous large losing week, trading before 10 o'clock drivers. There was a week recently I gauged before 10 o'clock every day, but every day had a 10 o'clock driver, and that was a large losing week. I'm doing the same thing now and trading on Monday on top of that. So you can see how it's taking a toll on my mental process intraday, right? But this setup, the following setup, is so clear, it's so clean, it's so obvious to me that I have to put risk behind it, and I'll name all the confluences behind this setup. So first, let's go to the 15-minute. And this is just a phenomenon that I've noted that the market tends to repeat over and over and over again. Notice how we have this pre-market range, right? And the first thing that we do is we take the high of the pre-market range, we drop down, we take the low of it second. All longs here, anybody who bought this right here in this move, they're all knocked out in the marketplace. Then we make the real move. So typically when we have a pre-market range, and this doesn't happen all the time, but when we set up with the pre-market range, this is ideal. Let's say I'm bullish on the day. We have a pre-market range. The most ideal thing that it's going to do is drop lower first from night 30 and immediately make the Judas swing, immediately make the fake move, the manipulation move, and leave these highs clean. In this case, we don't get that. In this case, it trades higher, takes the buy side first. If it does this and we have that pre-market range, I have to wait for it to drop down, take the low of the range second. Then it's going to make the real move of the day. So this doesn't happen all the time, but it is something that I've just noted that price just repeats. And this was essentially the framework for the model that I have created right now. That was the initial framework, but if I built off of it so much, it's not even the same things that I look for, really. The same principles are there, but it's just evolved over time. So looking at everything here that supports the idea of a long after I stopped out there, what do we have? Well, let's get this out of the way for a second. The market drops down. We have cleared the pre-market range low now, and I'm noting that. And I'm noting how we usually have this phenomenon where the market will take the buy side of the range first, drop down, take the sell side second. Then we have the real move when I have a bullish bias. We have this and this have failed. I'm noting how we formed a balanced price range. And what really stood out to me was the fact that on the 10 o'clock driver, what did we do? Well, we had a strong drop lower, but look where the body of the candle closed, right on the midpoint of first presentation and just barely colored outside the lines of that balanced price range, which is permissible. So in my eyes, I'm thinking it is still respecting discount arrays after we have done the damage, taking the sell side of the pre-market range, taking that initial low, longs are knocked out, and it has dropped down, but it's still respecting discount order flow. So this is what really caught my eye. The market begins to trade higher. Now we have a change in the state of delivery. This becomes a bullish order block on the 1 minute time frame. And then on top of that, what do we have on the 5 minute time frame that was so clean, so easy, so obvious to me? We had a 5 minute inversion fair value gap in the price leg that has removed sell side liquidity from the marketplace. Another thing to note is that when we drop down on that 10 o'clock driver, and this is that 1 hour inversion fair value gap, right? If we go to the 1 hour time frame, it's that 1 hour inversion fair value gap. On the return back into it, it does not even trade to the upper quadrant. That is a sure sign of strength. That's bullish. That is extremely bullish. Now we have the formation of an intermediate term low where we have a swing point with a higher swing point to the right and to the left of it. So now we have an intermediate term low. I didn't note that in the moment, but in retrospect, here it is. Obvious 5 minute inversion fair value gap. So we have overlapped this premium wick. Now we have a large up candle with a premium wick and an inversion fair value gap. So many reasons for the market to want to go higher here. An inversion fair value gap in the price leg that removes sell side from the marketplace. That's a high probability change in the state of delivery for me. So now I'm setting my buy limit order at the 5 minute inversion fair value gap. And usually I would not execute on 5 minute PD arrays, but because I'm combating the problems that I have right now, which would be stop management. I have a problem with stop management right now because I'm dealing with premature stop outs, and that opportunity cost for this mistake is $758 to 1.1K that I'm leaving on the table because of premature stop outs. And that has amounted to $500 in total loss because of premature stop outs. So the problem is I have to build the skill of stop management. Now, what am I doing to combat that? I am retesting all 81 samples that I've collected from my trade model. I have 81 samples from my trade model, and I'm going back and I'm retesting, okay, what PD array would I have executed on there? What was the point of invalidation, meaning where my stop loss would go? And what was the daily objective? What would I target? And this is building the skill of stop management. So now, when the market presents a 5 minute inversion fair value gap, I know where to put my stop loss on. I know to just put my stop loss a little below the low of it because of the work that I'm doing retesting all 81 of these samples. I know that 9 out of 10 times the market does not color outside the lines of that inversion fair value gap, so the stop can go just on the other side of it, and it does. So my stop loss is here. Now we have a confluence with other PD arrays. We have a bearish or bullish order block. I keep saying bearish. Bullish order block. The low of that is also the low of the 5 minute inversion fair value gap, and it's also the midpoint of first presentation. Both points that we would not want to see the market trade back down to if it leaves first presentation. So now we have a confluence of things on the 5 minute and the 1 minute, making that a high probability point for me to place my stop loss. And then in terms of distributing equity, this first partial that I had, if we go to a 1 minute, I'm not too happy with because I simply just took it because I was scared that the market was going to suddenly reverse. So I just pulled out, which is honestly, it's a good idea, right? I have to grow into the ability of holding on to these trades. The second partial is going to come off at Asia high that I mentioned in my pre-market plan. If we go to that, if we go to pre-market plan, what do we see? Where am I going to take off? First partial is going to be at Asia high. Then Tuesday high above that. Did I execute that? Yes, I did. First partial, Asia high. Then Tuesday high above that. So there you go. There you have it. The only reason that I'm able to come back and put on a winning trade and back up literally the largest loss that I've taken on this eval with a win and erase all that drawdown in the same session is because I know I have the conscious ability to control the perception of my losses. And I can make that loss as painful as I want, or I can make it mean literally nothing to me besides the fact that now I have the opportunity to go back in, study that loss, figure out where I went wrong, and grow from it. And that's it, because every failure carries with it an equivalency to success. So, sure, it's a mistake. Sure, I did a lot of damage, but guess what? Lesson, that's it. And guess what? Greatest traders, greatest losers. Guess what? You could do the same thing the following trade and get the exact opposite outcome. And I know what I'm looking for, and I know how to time reversals, and I know I'm confident in my ability to reprice, and I know where the market is going because I've stated it in my pre-market plan, and I'm aiming for that, and everything is telling me the market's going to go higher. Try it again. Just do it again. Literally. No big deal. That's it. So, things are starting to get a lot easier for me because I'm just figuring it out, like what works for me. Where do I place my stop? How do I recover from losses? Where am I taking partials? Where am I taking full take profit? What am I looking for today? What's my plan? How do I approach the market? How do I arrive at higher time narrative? How do I arrive at market criteria? All these things. Where am I framing my trade? What time is it going to come? If you do the work to figure out all these things, and they will come one by one as you need them, because that will be the current problem that you face. For example, for the longest time, my problem was higher time frame narrative and bias, arriving at a bias for that day. So that's the problem that I had to fix. And guess what? I did. I think I've had 90% accuracy in bias over the last 2.5 trading weeks. If today is 2.5 trading weeks, March 2.5 trading weeks, I've only gotten the bias incorrect one day. So I solved that problem. What's next? Once you solve a problem, there's going to be a new fire to put out. I guarantee that you're always going to have problems. You're not always going to have everything figured out. There's always going to be new problems that are holding you back. And so long as you figure out, okay, this is the problem identification, problem understanding, problem solution, boom, growth. That's it. So now I'm building a problem solving model to figure out what my problems are and how I can fix them. So now I'm developing a process for problem identification to problem understanding to problem solution. And I'm showing you guys right here, the proof is in the pudding that my problem solving model is working, is it not? Because today I was extremely resilient to the loss that I took. I was able to get in there and put on a second winning trade. I was aware of what I was reaching for in the pre-market session, all the things that I'm working for, and they're all noted in my daily process. If we look at the goal reflection section, right? What is my goal progression? What is my goal progression today? And I think to be able to stop. What did I even just say? To build the skill of stop management, I should definitely aware of or add resilience to loss. Resilience to loss. There you go. So that's it. What are your problems? Do you even know what they are? Do you understand them? Have you created a plan to solve them? Because I've done exactly that. And I'm immediately getting results. You have to take your trading seriously. Take your trading seriously. Do you want to make this work or not? It is completely up to you. I have created a plan to problem solve. Actionable steps. This is how I have to think. This is what I have to remove. Except one final thing would be build resilience to loss. Right? And so that's it. So, if you are serious about taking your trading to the next level, then I would recommend that you invest in TradeZella. And I am an affiliate with them, but I would not try to sell you anything that I don't believe in. Everything that I do is in one software. All my daily processes, all my weekly processes, they are all here. And this is the only tool that I need to become a profitable trader. I also have back testing in here. Everything is in here. So if you're serious about your trading, make the investment and get a TradeZella subscription. If you use my link and my coupon, you can save literally 20% off to make the best investment that you could possibly make for your trading. So I think somebody finally signed up using my link, and now they gave me a coupon code or whatever. So if you use my link and code INVEST, you can support me and support yourself, because you're making a definite decision that you're taking your trading serious and you're tired of fucking around. So long video. Didn't mean to go 30 minutes, but I'm giving you all the details. I'm giving you the sauce. If you watch to the end, let me know in the comments. And that's going to be it for this one. So I'll talk to you tomorrow. Good luck and good trading.